Hello and welcome to this broadcast by Brexit Watch. I'm your host, Jonathan Saxby. Today we are delighted to welcome The Economist and regular BrexitWatch.org contributor, Catherine McBride. Catherine, welcome to Brexit Watch.
Hi, Jonathan. It's nice to be here, finally.
Catherine, let's go straight into the economic side of the current crisis that we've all been living through over the last few months. What's been your overall assessment of how the government has handled the crisis, and what do you see in the months ahead for the UK economy?
I'm going to display my age in the fact that I grew up in a time when there were a lot more very dangerous diseases around the world, but I'm not entirely convinced that the locking down of the economy was the right thing to do. Obviously, that's a hairy hindsight idea because now we can see that it really doesn't affect the younger working population. I mean, you know, we retire at 65 technically in this country, and it's the people over 65 who are basically retired who are most affected by this disease. So this really surprises me that everyone was locked down. Now, people might suggest that that was because we were unaware of the extent of the disease, but I don't think that's true. I think by the end of March, it was pretty obvious who was most affected by the disease, looking at other countries. So I think that there is an element of, you know, I'm not sure we should have done it, but having locked down the economy, I think that the furlough scheme has been very effective, and you can see that with the rebounding of retail sales. It has also had some unintended consequences, such as what we are doing right now. I think a whole lot of people like me, for instance, my generation, who occasionally did Skype calls or whatever, has discovered Zoom and Teams and a whole lot of other ways of connecting with people. I think it might change going forward how much we fly around the world for meetings. I'm particularly disappointed that the COP meeting that was to happen in Glasgow at the end of the year has not jumped on this and decided to make it into a Zoom meeting, because the idea that you are flying people from all over the world to Glasgow, which in general you can't, in most countries can't get there directly, that would be at least 2 flights, if not more, and to talk about global warming and air pollution. You think, well, that's completely stupid. If any conference anywhere in the world should be happening on Zoom, it should be that one. But I think that the rumors going around that they will increase taxes to pay for the compensation they've given people for forcing them to stay at home, I think is crazy. I think that there is absolutely no reason to raise taxes. It sounds weird, but you know, it's all money we've printed. We've been here before. It's like raiding your savings bank or your piggy bank or whatever. Yes, we're back up to debt ratios of 100% of GDP, and we've got to accept that and get the economy going first. And when the economy is going, then you can start looking at taxes. But I also think something that people have not looked at closely enough is the fact that one of the reasons we paid so much money to the EU was because we imported a lot of things from outside of the EU, and all of the tariffs that were charged on that those imports was mainly 80% were sent to Brussels. So should we leave the EU without a trade deal? All of those tariffs will now be kept by us if we keep them. If we do trade deals with, say, America, that will make a big chunk of that will disappear because America is our largest individual trading partner. But if we can put tariffs on the stuff we import from the EU, and our trading agreement with the EU is mainly importing things with tariffs on them, that would have tariffs on them, because the EU is very mercantilist. They are only interested in selling stuff. They don't, you know, the BBC is constantly talking about British exports to the EU. They have obviously never looked at the figures. It's British imports from the EU. So if we put tariffs on all of those, that's another big chunk of money that the Treasury is not being counting on. Presently, with our VAT laws, personally, dropping VAT or reducing it could help the economy grow, but I think sales have rebounded very quickly, so I wouldn't probably do that. But right now, we also send, I think it's 25% of all VAT that's collected goes to the EU. Well, that will be more money that goes into the Treasury. So I think that the Treasury has to just relax for a while and see what sort of money it starts to collect once we come out of the EU. Except that this has been a write-off year. They've probably given away people more money than they've collected in taxes considerably. And then think about this, you know, a year or so after Brexit, start looking at where the money is coming in and where it's not, because they might be pleasantly surprised when they start getting money from tariffs or money from VAT that they possibly haven't been thinking about, because they sent it straight to Europe.
Sorry, Catherine, you've been mentioning the EU quite a bit there. Today, obviously, we have the news that's been reported in the Financial Times that the Downing Street is looking to actually go against the established withdrawal agreement and the Northern Irish Protocol. Obviously, we are on the eve of round 8 of the EU-UK transition negotiations. From Downing Street's perspective, if there is no deal coming up by mid-October, we will be looking at exiting on WTO terms. What's your opinion about all of that? Is it a good move to repudiate the withdrawal agreement and the Northern Irish Protocol? Is there anything to fear from a WTO exit?
Actually, I think it is fantastic. I'm cheering the government on. I think they should have given them a hard deadline 3 months ago, personally, but I'm glad they've finally done it. It's the only way you get the EU to concentrate. The EU got used to Theresa May's completely useless government and unbelievably inept negotiating style, and have expected the UK to just fold. And I have no idea why. You can download this as the EU Commission's mercantilist trade statistics. And it's phenomenal how much more they sell the UK than the UK sells to the EU. And yet, for some reason, they want us to sign up so they can keep doing this. And it's kind of incredible that they can't see that they benefit from the relationship they have with us. They can't see that the fish in our waters are the fish in our waters, just as the fish in Norwegian waters belong to Norway and those in Iceland's waters belong to Iceland. They have a very strange way of negotiating. And the idea that you can leave, but you still must follow all of our laws, especially on state aid, is incredible, because I think in many respects, we have better laws than they do. We have stricter laws. If you look at the amount of money they're handing out at the moment, individually from countries sort of ignoring the EU and propping up their own industry, as well as the EU's much fought over COVID fund. I don't know why they're worried about our state aid. I'm intrigued that our government isn't talking about their state aid, quite frankly. If anyone should be talking about state aid, it should be us going, well, wait a minute, you are completely subsidizing all of these companies. There is very little that we buy from the EU that we can't buy somewhere else cheaper. So they really should be bending over backwards to do a deal with us. And they seem to have neglected that side of the coin completely.
Catherine, on that point, before we went live, we were talking a little bit about the proposed trade deals that Britain is looking to strike with the United States, with Japan. How important are these deals, and is there any validity to the line that the UK is cutting its nose off to spite its face? It's walking away from a 450 million strong bloc right on its doorstep. There's no way it could ever compensate with a deal with the US or with Japan or renewed ties with the Commonwealth. What do you think of that?
Well, for a start, I just actually had the figures up, and I don't know if I can get them up without cutting you off, so I won't turn them back on again. But the US is bigger than either France or Germany in terms of the UK trade at the moment. And people have this strange idea that trade stops without a trade agreement. And that is why I think the government continues to refer to an Australian deal. And most people will know Australia doesn't have a deal with the EU, but Australia still trades with the EU. I have the figures here. You know, Australia bought 30 billion pounds. It is the 14th biggest customer for the EU last year. In typical EU style, the EU, Australia only bought 8 billion pounds, the EU only bought 8 billion pounds worth of Australian goods, and it was the 35th biggest place that they bought things from. So that doesn't surprise me, but as we are a customer, like Australia, right now the EU hardly buys anything from us. The Irish and the BBC are worried about the British beef exports to the EU. When DEFRA publishes fantastic statistics every year, agriculture in the UK, which I suggest the BBC and the Irish government reads, because we are net importers of beef from the EU, predominantly from Ireland. Now, all of that beef could be sorted, could come from the US, it could come from Brazil, it could come from Australia, there are Argentina, there are Uruguay, Paraguay, a lot of places, maybe not Paraguay, but Uruguay definitely. They all produce beef more efficiently and at a lower cost than the EU. But the EU seems to think that we will disappear without trace if we can't buy their products. That's what it boils down to. It's not about who we sell to, it's who we buy from. And in what we buy from the EU, a lot of it cannot compete at world prices. Meanwhile, if you look at what we sell to the EU, a lot of that is in financial services, and a lot of that the EU does not have an alternative supplier. So if they don't buy from us, they have to start thinking about who they will buy from, because they haven't, because of their very strict equivalence regime, they haven't given permission to a lot of the world's big financial centers that rival Britain, permission to trade with the EU. This is called equivalence. So though America has the most equivalence with the EU, it doesn't have complete equivalence with the EU. The only country that has been able to provide all financial services to the EU has been the UK. So if they stop trading with us, I'd really like to know where they're going to go. You know, who and are they going to just survive without financing and without insurance and without all of these things that we supply them with? You know, I gave a statistic in one of the papers I wrote, which comes from the City UK, that in currency markets, international currency markets, the UK controls 48% of world trade, and Germany, the biggest economy in the EU, has 2% in currency markets. I mean, you know, that's the second biggest in the EU, is only 2%. You know, it's completely crazy that they can walk away and find other people to do what we do for them. And yet we, because their trade is so heavily geared towards agriculture, we can get agricultural goods from any country in the world. And in many respects, it would be better for the rest of the world if we did so.
Catherine, can I just say your background is obviously in finance. Based on what you're saying, I'm assuming you see no threat to the UK finance industry from Brexit, let alone a no trade deal Brexit.
The finance industry is the world's greatest example of a free market industry to many respects. It's very, very mobile. It is that we call it the UK finance industry, but a lot of the industry that is operating in the UK comes from all over the world, because we have a very open system. And they will always find ways to deal, because if people need something, they will come to us to get it. Most of the big companies that are operating out of Britain, though Britain may be their biggest European market and headquarters, will have a big enough operation in the EU to continue trading via the EU's passporting system. The Irish government was very keen to get people to move to Ireland, and they only required, and this is going back to before Theresa May's deal, them to set up an office with 5 people, 3 of whom had to be there at least 3 days a week. So it was really simple for most, even small SME financial services companies, to set up a very small office, which was going to be enough to trade. Now, the French were very upset about that, and they wanted people to move capital into France and things like that. But I think even they've understood that that isn't going to work, and that companies are not going to do that, because the finance industry is very much driven by the bottom line. They're very good at working out exactly what they need to do to survive. And while people said that 1 million jobs would move to France or move to Europe, and then they cut that down to maybe 50,000, then maybe 5,000, and I think they're down to about 500 now, because everyone's realized you don't need to do that. And at the same time, I think the Europe's regulations on finance are very much geared to a large international financial system like the UK's. I suspect very quickly European banks, which are very much old-fashioned banks that lend money to companies, companies don't tend to issue stocks on stock markets the way they do in the UK. They will be clamoring to get rid of a lot of the regulation that was developed really with London in mind. And so you will actually find that the regulation in the EU starts to favour smaller more traditional banking, and doesn't actually work for the EU anyhow. So I expect us to diverge on regulation terms, and I think that will be good for both markets. And I think when large companies, even if they're based in the EU, need serious financing, they will come to Europe, to London rather, and small SMEs will go to their local bank in their local high street and get financing that way, which they have traditionally always done. Most, the EU is basically run by Germany, and Germany is very much anti what they refer to as Anglo-Saxon capitalism. They do not like publicly listed funds. They never have. When I first arrived in the UK over 30 years ago, one of the jobs I had was to sell stocks and shares to European clients, and they weren't interested. A German businessman once said to me, if the company is so good, why are you selling it? Surely the people who set it up should own it all 100% themselves. Why would they sell shares on a company if it's any good? And I think that mentality is quite entrenched in most of Europe. And you can see that in a lot of large companies in both France and Germany are still majority owned or very heavily owned by the families that set them up. And so you get a very different type of capitalism. And also a lot of regulations keep that in place. It's very hard. A lot of companies restrict who can buy them, and even more so in Europe, that sort of legislation has been added to in recent times in both France and Germany, with the idea that this is to stop the Chinese buying their companies, but it also stops anyone buying their companies. You know, they're quite protectionist in terms of their companies continuing to be owned by them.